Hey, good morning, everybody. Really important, nothing shocking, but I mentioned that the market is heavily manipulated, right? And here's a quote from someone who was on CNBC this morning, former Citadel engineering on trader, right? He says, the game is not fair. It never has been. Individual investors, who are the retail investors, when operating in a swarm, are destined to lose. He was asked, how do I know? I helped design the game. So that's a former trading engineer for Citadel. We all know Citadel because of AMC and GameStop. And they were the firm that made the most amount of money in quarter one this year and probably in quarter four last year. So they control the market. Another interesting point that I wanted to share with everybody is we all talk about day trading, how much money can be made on day trading. Okay, so the average salary of a successful day trader is about 118,000 a year, or about $57 an hour. The top 10% of traders make over 195,000 a year. We've all seen them on Twitter, right? While the bottom 10% of traders make under $72,000 a year day trading. So those that are frustrated, and I'll bring this to myself and I'll explain. I used to make trades and I'd be up 1,500 one day. Then I made another 5,000 up 7,000. Then I entered into a third trade, Bitcoin trade, Riot or Mara, lost 18,000, was down 7,000 on the trade on the day. Here's the point. If you can make $1,000 a day, you're in the upper 10% of profitable traders. Now, understand, only 10% of day traders are profitable. So that leaves 90% unprofitable. So I'm trying to help you become more profitable. How do you do that? Less trading. Less trading makes more sense. Have a strategy, follow through on the strategy. Give you an example. Last week, and here's what upsets me. The Fed really screwed the pooch last week, and I'll get into that shortly. But here's the thing. You had somebody on my platform who was bearish on the market, and the market just went down. He then flipped his position. The market continued to go down. He went from being positive on the day to negative on the day. When you flip-flop, you're bullish in the market or you're bearish in the market, and you flip during the day, it makes it extremely hard to be a profitable trader because you're explaining to yourself why the markets should go down. They're going down, and then all of a sudden you get in a reverse type of position. Same when the markets are going up. You're bullish. The markets are going higher. You're making money, but you decide to call the top and flip your trade, and then you get in trouble because you carried over puts like I did in a couple of trades into this week, and the market's gapping up this morning. So again, markets are manipulated. The average day trader doesn't make a shitload of money, so be cautious. Now, here's the thing that caught my eye this morning. China industrial profits year to date. It was forecasted at minus 4%. Okay. It came in at minus 23%. What happened to the Hang Seng market in China overnight? Down 1.75%. Now, when I zoom out, it makes me think, okay, if China struggles, the rest of the world's going to struggle. We're finally going to admit that we're in recession and the markets will likely go down. Now, here's the catch. The Fed injected $400 billion of liquidity over the last 2 weeks in the market. So where us bears are on the side, if you were a bear like myself, expecting the market to go down and saying to yourself, well, it only went to 392 and then it bounced up. And this morning pre-market, we're sitting at 398, basically 398 flat. And we'll get into the SPY predictions for today. But the whole point is the Fed saved the market. Everything that they had been doing for the last 8 to 10 months was reversed in 2 weeks. In 2 weeks, they added $400 billion of liquidity. So when people are saying, well, I'm a bear, I don't understand why the market keeps going up. There's your reason why the market keeps going up. As simple as that. Then you have like right here. Kramer says the Fed banking crisis is doing the Fed's work and creating a window for stocks to rally. So Jim Cramer just put the hex on it this morning. So I'm going to be very wary of the market. It's amazing how he puts X on the market, but he is technically correct. If the banks, and here's my thought process on it, if the SEC and the Fed hadn't injected $4 billion into the market, we would have had certain banks that failed. All right. We would have had startups that were struggling getting their money out. We would have had venture capitalists who are greedy pigs anyway, all in the West Coast, all in Silicon Valley, struggling and understanding that they can only invest in more short things, not investing in a stock because they're having an IPO and they're going to make hundreds of millions of dollars, which is what happens today. That's what happens today. Okay. Anyway, what else do we get into? So I mentioned that. The Feds stopped hiking rates and give back 2/3 of the balance sheet runoff. Remember QT and QE, quantitative tightening, quantitative easing. Yeah. Well, they gave it all back literally in 2 to 3 weeks. So that was from FX Hedges. He agrees with Jim Cramer. Market Mayhem agrees with Jim Cramer. Here's a good story. Deutsche Bank, okay? The swap defaults on Deutsche Bank are going through the roof, which makes me think Deutsche Bank could be the next bank to go under. Here's the other catch. Deutsche Bank short volume went from just under a million, which is 930,000, to over 7 million in 2 days. Now, the shorts haven't all covered their positions. So I'm looking at Deutsche Bank, which is DB, for two reasons. Number one, we could have a short squeeze in the interim, right? In this week, couple trading days this week, I'm going to be looking at volume. We could easily have a short squeeze on Deutsche Bank, or the shorts could easily manipulate the market. As we saw, Deutsche Bank fell 10% on Friday. It's bouncing about 4% this morning. But with over 7 million shares shorted, there's definitely going to be some downward pressure on Deutsche Bank. So again, I'm looking at Deutsche Bank for an intermediately day trade. Now, if I look at the regional banks this morning, now that FRC, right? What's FRC? Or right? Is that what it's called? FRC. Let me just make sure I have the initials right. First Republic. Let's just make sure. Yeah. First Republic, San Francisco. It's up 27% this morning. Why? Because you had Janet Yellen come out over the weekend and she said, they're all short up. All these banks are short up. Why? Because these larger banks added deposits to these smaller regional banks. However, these smaller regional banks, the pain is not over. So what am I doing? I'm going to look at the KRE. Now, the KRE, which is up 3%, it's an ETF with regional banks. It was up 3% on Friday after being down. It's up 4% pre-market? Is that something close to that? 3.63 pre-market. So I'm not going to get into a negative position with puts on KRE today, but I'm going to start talking about what trades I'm looking at to help everybody out a little better. So maybe they can go on your watch list next to the 3 or 4 stocks or ETFs you're watching. If you have a watch list of 20 or 30 stocks, man, you're killing yourself. There's too much information out there and you're going to confuse yourself. 2 or 3 stocks in the $40 range, you're going to think one is the other and back and forth. So what am I looking at? Again, KRE, regional banks. I expect more pain for the regional banks. Might it take a couple of days? Let me just see if we can play that. It could take 4 or 5 days of trading. And if today's an inflow day into the banks, which it looks like it's going to be, then I'm going to stay away from puts on that trade. Same with Deutsche Bank. If the shorts look to cover it, I'm looking for possible squeeze. If the shorts went out, then I'm looking for Deutsche Bank to drop even further. So Deutsche Bank this morning is up, 4 or 5%, 4.5% this morning, has a nominal valuation market cap on the company of $19.08 billion. Now let's talk about Silicon Valley Bank that went bankrupt basically and was just bought out over the weekend by Citizens Bank, a regional bank, for $500 million. They were worth $40 billion. They were sold for $500 million. They're down 99%. So for people to say, well, Deutsche Bank has a valuation of 19 billion, it's not going to go that much lower. I've seen Deutsche Bank and actually work for Deutsche Bank. That was the first bank I ever worked for out of college. And Deutsche Bank got sold off to, NatWest got sold off to Deutsche Bank. So that was interesting back then. Deutsche Bank wasn't run very well. NatWest wasn't natural. Westminster Bank wasn't run very well. They got sold off my arm. We lost $8 million in a quarter. And the bank was like, see you guys. Now, we lost $8 million in a quarter. I don't know if you watched my market manipulation video on YouTube, but I explained what I used to do to manipulate markets. So please make sure you subscribe. Besides from my video, we have a new video dropping at 9:15 this morning with the great one, Romeo, giving more advice. Now, it's not like, hey, man, I made a shitload of money. No, it's like, hey, these are things to avoid. These are things that I do to help me become more profitable. All the content that we put out there and the talks that I give in the morning is to help you. It's not to screw the investor. It's to make you worrisome of what's going on in the market, what could potentially happen, why the market did an about face from dropping to 392. Let's remember, I thought it was going to 385. Now, is that out of the question? Are we not going to 385? Well, it's still a possibility. Again, we could be walking into like the biggest bull trap ever. We're told, hey, banks are stable and then banks fall. So we've got a bunch of earnings coming out again for quarter two earnings, which are reporting quarter two that are based on quarter one. So then we're starting that whole cycle again. So here are some stocks that I'm looking at. Okay. You've got Carnival Cruise Lines that is going to report. Futu, which is like the Chinese like EF Hutton trading platform. You've got Love, LOVE. reporting. You have Go EV. I can't believe that they make any money. I'm looking at BlackBerry. You got EV Go again. So Go EV and EV Go should run similar. Got Rail, RAIL. What else did I want to see this week? LOV, SOL. Oh, yeah. And Micron Technologies, MU. Why? Because we heard a lot of people talking on the street how NVIDIA is ripping. Now, NVIDIA was 235, ripped all the way up to 275. Every time NVIDIA drops, it gets bought up again. So my play on NVIDIA might be not to actually play NVIDIA because you're paying too much for the IVs, but Micron is coming out with their earnings, a chip company coming out with their earnings. So I'm looking at Carnival this week, Micron. I'm looking at KRE, which are the small banks, regional banks ETF, and I'm looking at DB. Deutsche Bank. Why? Because Deutsche Bank went from under 1 million shares shorted to now there are over 7 million shares shorted on Deutsche Bank. So this is some earnings. I mentioned Chinese industrial profits. Futures opened up. Okay, let's talk about the SPY now and levels and ranges of the SPY. So let's see. Oh, man, I have the wrong thing on my screen. Let me see if I can present it. You guys can share with me. Let's look at the SPY. Boom, share it. Let's add it. All right, here we got the SPY up. There we go. Finally, it went up. Let me just close this down. It's probably big ads going to pop. Okay, so we see the SPY sitting at 398.37 pre-market. I've got the 1 hour chart. If we look at the 5-minute chart, you will notice that the point that it's sitting at 398.34, we didn't even touch that at all on Friday. So this is what is considered a gap up. So if we're going to look at a gap up, I'm going to go to the 1 hour and I'm going to see where could possible rejection be. Well, I'm going back 1, 2, 3 weeks. So 3 weeks, I'm seeing the same rejection areas. I mean, we went as high as 402. You can see the stem on this candlestick right here, but we really were rejecting the 400 level. We rejected it on March 8th, March 9th. We saw that level again, March, what was it, 22nd, the 23rd. We went all the way up to 402.50 before we saw a huge rejection. We've seen some buying, but volume's been decreasing. So this could be a bull trap. So I look at the SPY, I look at the dark pool levels. That's what I had up before I brought on this chart just to share the larger picture. Again, so we're 398.50, let's say. Rejection has been right at the 400 level. So I'm watching the 400 level. The next level up, I'm watching 402.50 because we saw that once in the past 3 weeks. If we break through 402, then yeah, we have a potential to ride all the way up to about 407. Now, we talk about dark pool off the exchange. You have $1.8 billion exchange traded on Friday at 393.40. Key level I'm already looking at. I write down 393.40 because when we make it down to that level, and yes, we probably will see that level at some point today, I'm going to look to see if there's support. There was an additional $2.8 billion reported between $395.62 and $395.63. So as we sit pre-market, where do we close? 395.75. So just over that dark pool level. So again, I'm going to watch this. Why? Because we could easily sell off and we could drop right back to the 392 level or 393.40, which I mentioned, which is the first billion that I mentioned from the dark pool. So what am I going to do? Well, I'm going to go on. I'm going to remove that from the stream. I'm going to stop sharing it and I'm going to share Discord. Why? So we can look at the dark pool levels together and we can look at the market net flow together. That's what I've been doing. That's how I start each day, deciding if I'm bullish, bearish, what I'm expecting, where could the SPY drop to, where will it go up to, where could it possibly reject. Okay, so the first thing I did is I looked at the net flow from the market and I looked at the number of open options this week with Friday's expiration date to see where calls and puts line up against each other. If you go out to Friday, it's still more heavily weighted to the put side. Yes, that could be people taking hedges. If I go out a month, it's even more heavily weighted to the put side. I'm looking at what we closed out on Friday when we saw that last little spike up. Very little volume. Most traders were gone. So I'm not trusting it. The fact that we're gapping up this morning, again, not really trusting it. I wouldn't be surprised if we spike off market open and then we see a nice dip and then the dip gets bought up. Okay, so there's the net flow. Now, when we look at, okay, the dark flow. Here we go, dark flow for the SPY. Huge level, 392.67, okay? I mentioned that we saw that's where we bounced last week. In fact, we went down to 390, which is right here, 389.90, 99. So 390, 392.67. If I'm writing down these inflection points. As I see the market, I'm looking at the volume. If I see support, I know we're going higher to the next level. If I see rejection, let's just say 398.03, the market opens, we bounce up to 398 plus or minus 20 cents, and I can't see the market going much higher than that and it keeps rejecting, then I know we're going down to the next level, which would be 395.35. And then I mentioned in the dark pool level 2.8 billion at 395.62. So again, I'm looking at 395.62. That's probably where we're going to drop to on open. So the market will open, it'll go up 10 minutes into the market, we're going to see a drop probably to 395.62 plus or minus 20 cents at that time. Would not surprise me if the market gets bought up. However, if you see a double dip, then we're looking at $393.40. So that's how I'm going to trade going into today. I'm going to watch the first 20, 30 minutes. I already have these levels written down on a side piece of paper. I'll go over them one more time with everybody. Let's just bring up the dark pool one more time. Where, how can I add this on? Let's see if I do that. Nope. That definitely was not it. It looks like it should be there. All right. Oh, I see how to do it. Here we go. There we go. Okay. So again, dark pool level. Okay. Very important. We just spoke about 400, 402. If the market goes up, you got to look at these dark pool levels, how small they are, 4 billion, 7 billion, 2 billion. So understand, if they want the market to explode this week, there's nothing holding the market back from shooting up. So that's what I'm hesitant into going into puts. But if I'm going to go into puts, I'm going to look for the market to reject certain levels. And again, I'm going to make up certain levels on the SPY. I'm looking at the 398.03. Why? We're pretty damn close to that this morning. If we spike on open and we reject 398.20, then I know we're going down to 395.35. That's the way I do my early trading. If we reject that, if we drop off the market open and we find support right away, 395.35, 395.62, where there was $2.8 billion traded, then that could be support. If I find support on the 1 minute and the 3 minute, then I can get into calls. Even though I'm a bear, I can get into calls. Why? Because the banking crisis is somewhat eliminated, supposedly, according to Janet Yellen and some others. I mentioned what traders average make on the year. Let's see what I got. Okay, Fed speakers this week. We've got 4 or 5 Fed speakers. Starting with Tuesday, we have Barr speaking on Tuesday. Barr is speaking on Thursday, 8 a.m. pre-market again. Barkin speaking on Thursday, 12:45 p.m. Treasury Secretary Yellen Thursday, 3:45 p.m. right before the market closes. FOMC member Williams, 3:05 Friday, and then after the market closes, Cook on Friday. This week, we've got consumer confidence on Tuesday. That's interesting. Won't really drive the market. Home sales data on Wednesday. I expect that to be extremely poor. Then we get into Q4 2022 GDP data on Thursday. That'll be important because then you have Treasury Secretary Yellen speaking Thursday afternoon. And then Friday, we have PCE inflation data. Why is PCE important? Because PCE, CPI, it's all important because it'll make the Fed either want to raise rates or pivot and just not raise rates going to the next meeting. Next meeting, I believe, is in May. We had the March raise. April, I don't think they have a meeting. If they do, they weren't speaking about raising rates. And then you got May's meeting, which they're still talking about 25 basis points. All right, anyway, let's see what else we got. Consumer confidence, pending home sales. Okay. Here's another interesting thing. Bullish bets soar on gold. So let's just take a look at that. Hopefully you guys can see that charts. So these are gold call contracts that have been opened. Now where you can see is they're averaged somewhere between these purple and blue lines. However, 2 days ago, 5 days ago, it was rolling. So we're going out till about Thursday. Options traders started loading into just the calls. The blue lines are the calls. The purple lines are the puts. So yeah, the puts got a little heavier, as you can see them towards the bottom of the screen right there. But the call action is huge up there. You're talking about 1.4 million contracts open versus the puts. You got about, 100,000 put contracts open. So yeah, you might want to look at gold on any pullbacks, right? Gold dips 2%, GLD or the ETF dips. You want to get into gold? Well, you're going to be following a lot of traders. Same with what I mentioned earlier. Deutsche Bank, right? Deutsche Bank has 7 million shares shorted. If Deutsche Bank pops like it's doing this morning, I'm going to find the top of Deutsche Bank. I'm going to open up some Deutsche Bank puts. Why? Because I happen to think Deutsche Bank sucks as a bank. So we'll check that one out. Here's another one. Call options on the VIX. Okay, so I follow a number of different people's on Twitter. Call options for the VIX. Signals traders bracing for a jump in volatility. If you look at that, there was a heavy spike towards the end of last week. So yeah, even though the markets are gapping up, I'm zooming out. Okay, I mentioned this could be one of the biggest bull traps where everybody's like, hey, the market's better again. Hey, banks have been saved. The Fed saves everybody. There's new liquidity in the market. The Fed doesn't care about quantitative tightening, quantitative easing. They do care. They say they care. Yeah, I mean, here's what they're doing right here. Here are the two culprits right here. U.S. considering expanding emergency lending. Yeah, that's how small banks are saved. Me, what would I have suggested? Survival of the fittest. You get those greedy ass small banks that were not managing their money correctly, they were not managing their investments correctly, then yeah, they should go under. The people in Silicon Valley that were putting their money in those banks, yeah, then they should go under too for not doing their due diligence. Okay, KeyBank. Oh, here's the other thing that I mentioned over the weekend, because I think there's going to be the next banking crisis, or the next domino to fall in the banking crisis is going to be commercial real estate loans. There's like, I forget the amount, maybe 80% of commercial real estate loans coming due in the next 5 years. Well, the value on commercial real estate has gone down. Why? People are working from home, things of that. So I looked up the number one bank that is holding commercial real estate loans. It's an Ohio bank. It's called KeyBank, Key. Where's KeyBank this morning? Up 7%. Okay. KeyBank closed $38.2 billion in commercial ongoing during the 2020 calendars, including loans through CMBS markets, pension funds, and life insurance companies. So it's not like going to just drop right away, because if you're a pension fund, life insurance company, you're holding these commercial loans, you're going to find a way to delay payments, push them out. But yes, commercial loans are going to topple over these smaller regional banks. So even if smaller regional banks somewhat rebound, yes, I'm looking for them to drop. Okay, let's go into some stocks that I'm looking at. By the way, tomorrow morning, I'm taking a family member to have surgery. So tomorrow morning's live stream is going to be about 10 minutes. But here's what I'm looking at. Okay, so KeyBank, it's up 8.94% this morning. Deutsche Bank up 4.39% this morning. Okay, those I have because I want to short them when I see them finally get rejected. What else do I have on my list? Well, I've got Block and Block and Coin on my list. Following the crypto movements, ton of buying with Square's sell-off after the Hindenburg report. So supposedly Square, Block, they're going to file legal action against Hindenburg. They have the support of Kathy from ARK. Why? Because she bought 400,000 shares of Block in the last 2 trading days on Thursday and Friday. So when you see volume spiking and the stock is dropping, yes, Kathy is supporting that. And when you see huge Block shares and you're a huge trader yourself, what do you like to do? You follow those Block trades. So again, not saying it's happening today, but I'm watching for the volatility on Square and Coin because they're both poised to break out. Square could easily go back to where it was trading pre-Hindenburg report, and you have Coin that could run back into the 80s. Similar, if people decide to start selling and big money selling Block and selling Coin and there's downward pressure, I could see Coin dropping back into the low 50s, 53, 54. So you're talking about 14 points to the downside, 17 points to the upside. So I'm going to be watching Coin, Block. I already mentioned Deutsche Bank, KeyBank on my list. First Republic up 30% this morning. Ridiculous. Upstart. Okay, Upstart has a valuation of $1 billion. Here's the chart on Upstart. Looks like crap, right? So even the Upstart is 2% this morning. I'm actually expecting Upstart's market cap to drop closer to 600 million, which still gives it about $4 or $5 more to fall. Again, that's a longer trade. Upstart, they don't have any profitability. It shouldn't have any PE. Let's just see. Yeah, earnings negative 1.3813 per share. They have no forward PE because they don't earn it. Price per book value 1.564. 52-week high, $125. Remember when Upstart was a $400 stock? 52-week low, $12. We're trading at pre-market $13.20 something. So yeah, I think that Upstart with any type of negative news or any type of earnings or just any type of smaller cap struggling. I mean, it went down from $15 to $13 in the last week. So yeah, in a couple of weeks, it would not surprise me if Upstart was trading in the $8.80 range. So I've got that on my list. Carvana, I'm staying away from. We saw Carvana have that big spike last week. Again, when I talk about a stock and I'm saying, hey, I think Carvana's at $7, it could spike all the way up to $9.50. When it goes to $10, that's it for my trade for Carvana. I'm in, I'm out. Now, unfortunately, my options expired the Friday a week ago, so I didn't make more than about 18% on my Carvana trade. But those that bought themselves enough time, congratulations. So let's go into real quick lesson. Those that want to be successful traders. I mentioned before what successful traders need to do. But here's the catch, right? You're a successful trader. You're investing the same amount of money into each of your trades. You have an account with $900. You're putting $100 into each of your trades. You don't have one trade that you say, oh, energy is going up. I bought some options. My options went down. I put more money into it. And now $893 out of my $907 available is in XLE calls, because you'll wipe out your account. And yes, you could be right 1, 2, or 3 times. I used to have accounts that I would take 2,500 to 5,000 to 14,000 to 28,000 to 54,000. And when I was wrong on the $54,000 play, I went all the way back to $3,500. So that is not the way to trade. The correct way to trade is use the same amount. You're investing 10% rule, 10% of your account, $1,000, $100 per trade. What about a smaller account, Matt? Okay, well, I'll mention 2 smaller accounts that I'm in. I started an account, 2 weeks ago with $100, made 120 the first day, so I was up to 120, then I was up to 200, then I was up to 360. I was looking to close out last week at 400. I didn't. The account is worth $205 or $207 because there's a couple extra dollars in there. What am I in? I'm in 5 Snapchat puts. That's it. So I don't want to sell at a loss. Again, I put in 100. They're worth 205. The account's worth 207. What am I going to do? My strategy is stop loss. Stop loss. If my options become half of what they are going into today, meaning instead of $47, they're worth $25 each, or actually $23 each, then I'm going to sell out and I'm going to start over with the $100. But I'm also giving myself enough time to be all right. I have 5 days for Snapchat to drop. So even if technology is somewhat stronger, cues are strong, I can hold my position because I think all this hype surrounding Snapchat will drive it down. They're not going to ban TikTok, in my opinion. Yes, the Senate's talking about it. I don't see that happening. So that's one account. What am I doing now? Well, I want to trade this week. Well, shit, I opened up another account with $100 in it. Okay, well, I was just talking about a 10% rule. So what is my first options trade going to be? Well, it's going to be an 8, a 9, a 10, 11, a 12, maybe up to $15 per contract. Well, what does that mean? It means that I'm not trading a small account at 9:30 when the market opens because you're going to pay too much for IV. So I'm going to let the market play out during the day. When I think the market is topping and a little heavy and going to come down, I'll go out 3 days on the SPY. I'll look at 15 points out of the money. No, I don't think it's going to drop 15 points, but that would let me enter into a contract paying $9, $10, $11, $12. When the SPY drops 3 points, boom, those $9 contracts are going to be worth $16. I'm going to sell. So, but I'll take profit. 7 over 9 is about 63%. That would be a hell of a trade. There's a strategy. So small accounts, you shouldn't be trading at 9:30, 9:45, 9:50. You're paying too much. Let the market play out. Come up with a complete strategy. I'm going to enter in, looking at where the bottom of this cost is, whether it's a call option or a put option. It was as low as $8 on the day. Now it's at 14. Well, shit, I don't want to pay 14. 14 up from 8 is a 75% move higher. So what am I going to do? I'm going to sit back and let that contract come back to $10. I'll put in my bid at 9. Oh, it comes to 9 for a second. I get it at 9. Goes back up to 13. Great. I just made 44% if I sell at 13. That's what the strategy is. Percentage gain. When you compound that percentage, that's how you get small accounts to go from 100 to 200, 200 to 600, et cetera, et cetera. Okay. See a comment. The deal about TikTok is they're not getting our info. Well, they're not getting our info from it as they are from Facebook. So the whole conundrum is TikTok supposedly learning more about us, what our likes are, what our dislikes are. Facebook does the same thing. Pinterest does the same thing. Snapchat does the same thing. All these companies do the same thing. When you download an app and it likes to allow you to view your location just while using the app or all time. If you hit all time, what do you think they're doing? They're tracking your movements. They're passing it along. They're selling data. So all these companies are doing it. Okay. Let's see another questions, comments. Are insurance companies, they hold bonds. There's a lot to weather. Yes, the banking industry has a lot to weather. Just because these banks are made stable or whole for a couple of weeks or even a couple of months, they still have a longer road to travel. They have more hardship. What's the Discord channel and how can it be accessed? Yes, hopefully someone would share that. You know what? I could share it. It's easy. You go soc-platform.com. Hopefully that works and I can share it. Let's see. Show. Oh, there you go. So you can join Discord. Again, we charge $34.99. What do we like to use for Discord? Well, I already explained what I like to use, but I'll show you guys some other things on Discord that makes it worthwhile. Okay. So you go up to Discord. We do have the free session. How do you join? When you join, you'll click join here and you'll click on that. That's simple as that. Now, again, we have the gains, the testimonials. You can read about that, but that's not going to serve you right now. We have upcoming events like when Romeo is going to go live. Here's the flow and algos. It tells you how to use the flow and algos room. Wait, I could type in all these things. Yeah, you could type in big flow. It shows you the 10 largest option flows in order today. Why is that important? Well, if big money and big flows are going to a certain option position, guess what? If you follow them in, it's called riding the coattails. So you only have to look at the big flows for the day. You can look at them at 10 o'clock. What do? Use your strategy. You're like, there are big flows going to this position. What am I going to do? I'm going to follow them in, but I'm going to wait for the stock to come down. Or I'm going to wait for the stock to pump before I buy puts. What do I like to do a lot of times? Besides for cough, I like to look at the big flows. I like to get in better than big money. When I see, and I'll go back to Discord, when I see a golden sweep come in, right? So it'll tell us what happened on the golden sweep. They bought these large golden sweep, put golden sweeps. They think Meta is dropping down. They tell us the time that it was purchased, right? So 3:58 p.m. I'll look at Meta at 3:58 p.m. I'll say, okay, Meta was at 206. If Meta goes up to 208, guess what? I can buy, Microsoft. I can buy these puts cheaper than the person that bought the golden sweeps. Oh, look, Shop. They're bullish Shop. These expire May 19th. When were they purchased? Right before market close on Friday. How much did they pay? 1.56. So I can take any of this information and then I can go into the rooms and I'll say, okay, well, let's see the flow on Shop. So let's look at the net flow, TR, net flow on Shop. So again, that trade or that options alert was telling me Shop is bullish. Great. And when did I find out? A couple of minutes prior to the market close. Let's just see. Might not like my capitalization. Shop. There we go. And I'll also look at the algo flow for Shop as well. So we'll look at this one first. The net flow for Shop. What is it showing me? Oh, the cost for calls is spiking. It spiked probably right before the market closed or sometimes before that. The stock price is correlating. It's going up to meet this top line. The costs for puts, which we already know there's just as many bearish people in the market. It's kind of stabilizing here. It's still positive. So we're going to actually look for this to come down if I'm following Shop. I'm going to look at the algo flows. So we see where the price is right here. The algos said, okay, Shop should be spiking up to $45.50. The fact that Shop is only at $45 tells me it has a little more room to run. So again, these are just simple tricks that you could use when joining the platform. Again, you can read how to use it. Let's go back and just talk about what else we like to do real quick, because what else do I like to do? Option sweeps. I like to look at the trading flows. It tells me when large contracts are being purchased. Here's another one for Shop again. So it's showing me another call for Shop expiring when at 2:59 p.m. The other one was 3:58 p.m. So it's telling me that people think Shop are going higher. So yeah, that could be added. I'll look at the dark pool. Dark pool will tell you what the percentage is according to what the float is. So I'm looking for something that has a float percentage closer to 1%. If they're trading 1% of the dark pool, then they don't want anybody to know about it. So I'll go down and I'll look what the largest trades are. Here's a large positive trade, 0.23%. CTO. So I'll look at CTO and I'll see how bearish that looks. It has the price right there. It's filled at ask, which is definitely a bullish position. So we'll go CTO, and it was done at 16.54. Again, 16.54. If I look at the chart, okay, what am I seeing? Inflow. 6 out of the last 8 days. It looks like it's forming a W. So this could be one that I look at again. Or I can look at large block trades, the last one to happen. What else? Bullseye trades. These usually take a day or two to play out. I think it actually tells you that. expect to pan out within a day or two. I like to give it 1 week or two. So I'll look at ON. Now, if anybody's looked at ON, man, this chart's just been moving up, 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 up. Yeah, so again, the market's going to show a little strength. ON will go higher. I have it on my list, but I figured I was late to catch that. We've got some scalp suggestions. Again, I usually give them more time to play out. Social interest stocks mentioned, and they'll talk about bullish or bearish sentiment. Okay, so let's just go down at the bottom. Bullish sentiment, stock symbol ID mentioned today 140 times. Price change is down 2%. So it tells you a score based on how much activity it's picking up in the social market. So hopefully everybody wants to join. I mean, it's a great platform. Romeo goes live a couple times a week. I give my market updates, but that's not why you're joining. You're joining so you have the same tools that Big Money has. Big Money that uses these same tools to see whether there's positive inflow, bearish or bullish divergence. If you don't know what I'm talking about, bearish divergence is telling you the algo says the stock price should be down here. Stock price is up here. What generally happens is they meet in the middle. So when I say, hey, I think a stock is going down or a stock should go down, it's because it's showing bearish divergence. Bullish divergence, algorithms up here. It says the stock price should be 100. The stock price is actually at $90. It has some bullish divergence. They're probably going to meet in the middle, and the stock price will likely go up from 90 to 94 to 96 to 98 until they cross over or intersect. So that's how you use bullish, bearish divergence. You can look at top flows. Anyway, so let's go back one last time. SPY predictions. We're sitting at 398 flat, which is where we were when we started. Again, if I'm going to be a bear and give you the bear case scenario, well, shit, we've rejected the 400 level for a number of days. If you can go back a number of weeks, you're only seeing a 402.54 as the high. So again, my levels, 400, psychological, 402.50. If we break that, there's very little dark pool activity all the way up to like 407. So your bull case scenario for the first 1, 2, 3 days of the week is drop, pump. We've seen that a lot. Bear case scenarios, well, shit, we're definitely going to retest that 392. And if we do, then we're going to retest the 390. So the fact that we're sitting at 398, we're sitting 2% over where I think we're going to test at some point this week. Again, I'm a bear. I will not fight this market. If this market looks strong and volume is there to back it up, I'll be on the sidelines because there's no way that I'm getting stuck in calls when I'm still a bear in this market. Again, I wasn't happy with the Fed and the SEC making our markets more liquid, which is what pushed the markets higher. They added $400 billion of liquidity in the past 2 weeks. Hopefully they get that straight and the markets could, consolidate just a bit. With that said, heading over to Discord, see everybody in a little bit. Thanks for joining me this morning. If you liked what I